Okay, this question, number 2, is actually incomplete records capital comparison method. Okay, first they ask you to calculate the amount of capital as at 1st Jan 2018. A lot of you, I don't know why, okay, you went to look at the balances on December 31st. Okay, but the question actually is very simple. They just ask for 1st Jan 2018. So what do? Just look at the figures here, 1st Jan 2018. Okay, and how do you calculate capital at this point in time? Okay, label down the assets and liabilities first. Okay, then what you do is just to take the accounting equation A equals to L plus E. Okay, E or capital will be equals to A minus L. A minus L. Okay, so just subtract and you will get the answer already. Okay, very easy. Okay, now they ask you to calculate the balance following as at 31st December 2018. Okay, so these will be the balances on this date, 31st December 2018. Okay, but before we look at all these balances, okay, we have to look at the adjustments because these are the adjustments that we are supposed to adjust on the last day of the year. Okay, remember, whatever happens on the first day is done really. Okay, these are balances brought down from the previous year. Okay, so we don't need to adjust 1st Jan 2018 anymore because these are balances from the previous year. We bring them down. Okay, and once we close the accounts, that's it. Okay, don't adjust. We adjust accounts here. Understand? Let's look at it. Okay, what I do usually is that I will look at the additional information, okay, and try to write out the journal entries first, okay, to help me to see what I should adjust. Okay, number 1, they say that fixtures and fittings are to be depreciated at 10% per annum on cost. Okay, if you take 10% of 20,000, okay, it's actually $2,000. Okay, so the journal entry will be debit depreciation, credit accumulated depreciation. Okay, but remember, we want to adjust items that are belonging in the balance sheet because we're going to use the equation, accounting equation, A equals to L plus E. Okay, therefore, whatever that pertains to expenses and income, I would actually just ignore. Okay, because even though I adjust on top here, right, we won't be using this value, depreciation, to calculate capital for us. Okay, because capital equals to A minus L. So basically, I just want to use those balances that are A and L, okay, and adjust it to help me to calculate capital. Okay, so I don't need to care about depreciation because this is an expense. Okay, accumulated depreciation, I need to adjust because this is a contra asset. Okay, therefore, okay, accumulated depreciation of fixtures and fittings, $2,000. I actually put down negative A, okay, which is a contra asset. Okay, the next adjustment. Eileen withdrew $120 per month from business bank account for personal use. Okay, for this part, right, I know that the journal entry is debit drawings. Okay, because it's $120 per month, so in 1 year, she actually drew out 1440. Okay, but remember that for capital comparison method, okay, if the transaction does not mention anything, okay, we assume that they have already recorded down this $120 in the amount above. Okay, this has already been recorded. Therefore, I don't need to adjust for cash at bank anymore because it has already been recorded. I do need to take into account drawings though, because later in our statement of profit and loss, I need to add drawings. Okay. Number 3, during the year, Eileen paid off the business loan using her own savings. Okay, if we look at the loan amount, from 5,000, it suddenly became a 0, which means that Eileen actually paid off this loan of $5,000. Okay, and because we are using her own savings, okay, this is actually capital. She contributed her own savings to pay the business loan. Therefore, our journal entry is debit loan, credit capital. Okay, but like what I've mentioned earlier and similar to part 2, they did not mention anything about whether this transaction was recorded. Okay, so we assume that this transaction has been recorded, okay, in the transaction above. And you can see that yes, from 5,000 it became a 0. Okay, therefore, don't need to adjust for loan anymore, already recorded. We do need to adjust for capital later. Okay, and this is actually my additional capital in my statement of profit or loss. Okay, next part. Okay, I need to write off Messi's debt because they said that the amount owing by Messi was not yet written off. Okay, Messi owes $125 and he was declared bankrupt. So how do we write off the debt? Debit allowance, okay, credit TR. Both amounts actually will go down. Okay, so allowance will go down by 125 here. Okay, and my TR here will go down by 125. Okay, we adjust it because they said that was not yet written off. That means they haven't recorded yet. Okay, then end of the year, they say that it was estimated that $300 was likely to be uncollectible. Okay, this means that my allowance amount, allowance for impairment of TR, okay, is actually $300. Okay, and let's see. So just now after writing off, okay, our balance becomes a 0. Okay, and what do we do now? We want it to be 300. Okay, so from 0, how do we become 300? We add $300. Okay, I repeat again. Just now after writing off, 125 minus 125, right, is a 0. Okay, agree? Okay, and we know that our ending balance, the question wants it to be $300. The ending balance in my allowance account is 300. Okay, so therefore, we need to increase my allowance by 300, which also means that my impairment loss on TR is $300. Okay, and allowance goes up by 300. Okay, just now I mentioned that because my impairment loss, this is an expense. Okay, and we do not need to adjust for any expenses or income in the figures here because I just want to use my A and L. Okay, so you can just ignore my expense, my impairment loss, but we need to take into account my allowance, okay, to make it to $300 over here. Okay. Okay, so for part B1, they asked us to calculate net book value of my fixtures and fittings. Net book value equals to cost minus accumulated depreciation. Okay, if you look at my workings, right, my cost is $20,000, accumulated depreciation is $2,000. Okay, so just take 20,000 minus 2,000, you will get my net book value of $18,000. Okay, over here. Okay, next part, my net trade receivables. Okay, net trade receivables, if you don't like to look at this kind of equation, right, look at your balance sheet. Okay, net trade receivables is same as TR, okay, less allowance. Okay, remember that my trade receivables have to adjust because my TR, okay, here, after I write off is 8,000 minus 125. So after I write off, my TR is actually this value. Okay, this is after write off. Okay, less allowance. My allowance amount is $300. Okay, here $300. Okay, therefore, my net TR is this value here. Okay, just subtract it. Okay, next part. To calculate total assets, Okay, what you do, right? Very simple. Actually, for here, because I already labeled down my A and L. Okay, so to calculate my total assets, just add all my assets together. Okay, but remember to subtract my contra asset. Okay, there were many of you who wrote cash at bank as an asset, but look at here, this is actually a credit amount, meaning that this is actually a bank overdraft. Okay, and bank overdraft is a liability. Okay. Okay, last part, my total liabilities, same thing. Since I already indicate here which are the A and L, right, just add up all my liabilities, mainly my short-term borrowings, my bank overdraft, okay, my commission income received in advance, and my other payable. Okay, last part. Okay, they ask us to prepare a statement to calculate the profit or loss. Okay, so I need to see your statement. Okay, your statement, if you refer to your notes, right, looks like this. Okay, start off with ending capital. Ending capital, okay, is the same as my ending assets minus ending liabilities. Okay, because we are using the equation A equals to L plus E. Okay, so E equals to A minus L. Okay, my ending assets in the question is 25675. Okay, and my ending liabilities calculate in the above part is 9950. So just take ending assets minus ending liabilities. Okay, you should get this value. Less beginning capital, 25,000 is taken from the answer at the start. Okay, here, $25,000. Okay, from 2A. Okay, this is from part A. Then less additional capital. Remember that just now when we are doing our workings, my additional capital, okay, is $5,000 from part 3. Okay, add drawings. My drawings is from part 2, 1440. Okay, and calculate everything, you get a negative amount. Okay, that's why my ending amount is a negative. It's a loss for the year.